Something just happened that most people completely missed, and if you don't understand what I'm about to show you, you're going to kick yourself in a few weeks when Bitcoin is trading significantly higher and you realize you had the perfect entry opportunity right in front of you. Bitcoin is finally back. And I don't mean back in some vague, hopeful way. I mean back with concrete technical confirmation that the consolidation phase is over and the next leg up is beginning. But here's what's interesting. Almost nobody is talking about this. The headlines are focused on other things. Social media is distracted. And that's exactly when the best opportunities present themselves, when everyone's looking the other way. Let me show you exactly what just happened and why this matters so much. Bitcoin just broke out after 57 days of consolidation. 57 days of going sideways. 57 days of testing support, retesting resistance, shaking out weak hands, and building the foundation for the next move. And it didn't just break out. It closed daily above the critical resistance level of $94,000. That's not a wick. That's not a fake out. That's a clean daily close above a level that's been rejected multiple times before. Now, if you've been following Bitcoin for any length of time, you know that consolidations are normal. They're healthy. They're necessary. Markets don't go straight up. They move in waves. They advance, they consolidate, they advance again. And Bitcoin, especially in bull markets, has a very clear pattern of how these consolidations work. This is now the fourth time in this cycle that Bitcoin has gone through a long consolidation, retested support levels, and is now attempting a breakout. Fourth time. And here's where it gets really interesting. These consolidations aren't random. They follow a pattern. They take a specific amount of time. And when you understand that pattern, you can position yourself ahead of the next major move. Let me break down the numbers for you, because this is where the hidden information is. This is what most people aren't seeing. The first consolidation in this cycle took 63 days. Bitcoin went sideways for over 2 months, building energy, flushing out impatient traders, and then it exploded higher. Everyone who sold during that consolidation out of boredom or fear watched the price run away from them. They thought Bitcoin was done. They thought the momentum had died. But what was actually happening was accumulation. Smart money was loading up while retail was capitulating. The second consolidation took 56 days. Again, almost 2 months of going nowhere, testing the same levels over and over, making people question whether the bull market was over. The doubt crept in, the fear intensified. People started writing articles about why Bitcoin had topped, and then breakout. Another massive leg up that left the doubters behind. The ones who held through the boredom were rewarded. The ones who sold had to buy back at higher prices or miss the move entirely. The third consolidation took 49 days. Slightly shorter, but the same pattern. Sideways price action. Fear. Uncertainty, boredom, the emotional cycle that Bitcoin puts traders through every single time. And then, boom, higher prices, new local highs. The cycle continues, the pattern holds, and the people who understood the pattern made money while everyone else sat on the sidelines confused. And now, we just completed another consolidation. How long did it take? 57 days, right in the middle of that range. 56 to 63 days. The pattern is holding, the rhythm is intact, and history, when it comes to Bitcoin market structure, has a way of repeating itself with remarkable consistency. This isn't coincidence. This isn't random noise. This is how Bitcoin moves in bull markets. It accumulates energy during these consolidation phases. It builds a base. It shakes out the weak hands and the over-leveraged traders. And then it releases that energy in explosive moves higher that catch most people off guard. So what happened after those previous 3 consolidations? Bitcoin broke higher every single time. Not sometimes, not occasionally, every time. The consolidation phase was the accumulation phase. The smart money was building positions while everyone else was panicking or losing interest. And then when the breakout came, it came fast and it came strong. It didn't wait for perfect conditions. It didn't announce itself. It just moved. Now, I know what some of you are thinking. Past performance doesn't guarantee future results, and you're right. Nothing in trading is guaranteed. But when you see the same pattern repeat 3 times in a row, and then you see the setup for that pattern forming a 4th time, you don't ignore it. You pay attention, you prepare, you position accordingly. Because the probability of that pattern continuing is significantly higher than the probability of it suddenly breaking down after working perfectly 3 times in a row. But let's go deeper than just the consolidation timeframes. Let's look at the actual market structure, because that's what tells you whether this is real or whether this is just another fake out that's going to fail. When I look at the long-term chart, when I zoom out and look at the bigger picture, Bitcoin keeps forming higher lows and higher highs overall. That's the definition of an uptrend. That's the definition of a healthy bull market. You're not seeing lower lows. You're not seeing a breakdown in structure. Even during the pullbacks, even during the scary moments when everyone thinks the top is in, Bitcoin is holding above the long-term trend line. Think about what that means. It means that at every major pullback, buyers step in at higher levels than they did during the previous pullback. It means that support is rising. It means that the market is saying, we're not going back there. That price level is too cheap now. We're defending higher ground. And that behavior, that willingness to defend higher levels, is what separates a bull market from a bear market. In a bear market, each bounce gets weaker and lower. In a bull market, each dip gets bought at higher prices. And that's exactly what's been happening. During this most recent consolidation, Bitcoin pulled back, tested support, and held. It didn't break down. It didn't cascade lower. It found buyers, strong buyers, buyers who are willing to defend those levels and accumulate more. That's the behavior you want to see before a major rally. That's the behavior that tells you the trend is still intact and the next move is likely to be up, not down. The fact that Bitcoin is holding above the long-term trend line even during these consolidations is incredibly bullish. It means the foundation is solid. It means the structure is healthy. It means that despite all the volatility, despite all the noise, despite all the fear and uncertainty, the underlying trend remains firmly bullish. Now let's talk about the indicators, because this is where the technical confirmation comes in. This is where we go from it looks pretty good to the momentum is actually shifting, and this is likely real. First, the MACD. For those of you who aren't familiar, the MACD is a momentum indicator that shows you whether buying pressure or selling pressure is dominating. It's one of the most widely used and respected indicators in technical analysis. And right now on Bitcoin, selling pressure is clearly reducing. You can see it on the chart. The histogram is compressing. The signal line is starting to curl. The gap between the MACD line and the signal line is narrowing. Momentum is slowly shifting from selling to stabilization. This is textbook pre-breakout behavior. This is what always happens before a major move higher. The selling exhausts itself. The momentum flattens out. The pressure equalizes. And then, right when everyone thinks nothing is happening, right when traders are bored and ready to move on to the next shiny object, that's when the buying pressure comes back. That's when the momentum shifts from neutral to positive. That's when the breakout happens and catches everyone off guard. And we're seeing that exact setup right now. The MACD is showing that the sellers are done, they've exhausted their ammunition, they've pushed the price as low as they can, and now the buyers are starting to take control again. The momentum is shifting, the balance of power is changing, and that shift typically leads to significant upward price movement. Second, the RSI, the Relative Strength Index. This measures whether an asset is overbought or oversold, and more importantly, it can show you divergences that signal trend continuation or reversal. And right now, on the weekly time frame, which is the time frame that matters for big structural moves, Bitcoin is showing hidden bullish divergence. Let me explain what that means in simple terms, because this is crucial. Hidden bullish divergence happens when the price makes a higher low, but the RSI makes a lower low. It sounds counterintuitive, but it's actually one of the most reliable bullish signals in technical analysis. It means that even though the price isn't making dramatic new highs yet, even though the chart might look flat or boring, the underlying momentum is building. The pressure is accumulating beneath the surface. The trend is still bullish. The structure is still strong. And a breakout is likely coming soon. This is not some obscure indicator that only works sometimes. This is not some random signal that people cherry-pick after the fact. Hidden bullish divergence on the weekly RSI is one of the most powerful signals you can get in crypto markets. It's caught major moves in Bitcoin, Ethereum, and dozens of other assets over the years. When you see this signal, you pay attention. When you see this signal combined with other bullish factors, you get positioned, because the probability of a significant move higher increases dramatically, and it's flashing right now. On the weekly chart, at the exact moment when Bitcoin just broke out of a 57-day consolidation that matches the previous 3 consolidation periods perfectly, the timing couldn't be better, the setup couldn't be cleaner. So when you combine all of these factors together, when you look at the consolidation pattern that's held 3 times before, when you look at the market structure showing higher lows and higher highs, when you look at the long-term trend line that's still being respected, when you look at the MACD showing reduced selling pressure and stabilization, and when you look at the RSI showing hidden bullish divergence on the weekly time frame, it all points to one conclusion. Bitcoin still has fuel left. This isn't the end of the cycle. This isn't the top. This is the pause before the next leg higher. Now let's talk about what happened during this consolidation that makes the setup even more bullish. The market flushed leverage. If you were watching the price action over the last 2 months, you saw multiple sharp moves down. Quick drops of 5, 7, 10% that seemed to come out of nowhere. Those weren't organic price movements driven by fundamental news. Those were forced liquidations. The market was cleaning itself out, getting rid of the over-leveraged long positions, getting rid of the weak hands, getting rid of the people who were trading with too much risk and not enough conviction. And that's healthy. That's actually necessary for sustained rallies. Because when you have too much leverage in the system, when you have too many weak hands holding positions with stop losses clustered at the same levels, the market can't rally sustainably. Every little bounce gets sold. Every attempt to move higher gets crushed by people closing positions or getting liquidated. The market becomes fragile. It becomes prone to sudden collapses. It can't build momentum. But after a good flush, after the leverage is out and the weak hands have been shaken out, that's when real moves can happen. That's when you get sustainable rallies that aren't constantly getting knocked back down. Because the people left holding are the strong hands, the believers, the ones with conviction, the ones who understand the long-term picture, the ones who aren't going to panic sell at the first sign of volatility, the ones who have cash available to buy more if the price dips. Those are the market participants you want when you're building for a major rally. And that's exactly where we are right now. The weak hands already left. They sold during the consolidation because they got bored or scared. They got liquidated during the flash crashes because they were using too much leverage. They're gone. They're out of the market. And now the price is stabilizing above key support levels. Now the buyers are stepping in with confidence. Now the foundation is set for a big rally. The cleanup process is complete. The market has been flushed. The structure has been tested and held, and now we're breaking out above resistance with momentum turning positive and the pattern suggesting significant upside ahead. And here's the thing that most people don't understand about how Bitcoin rallies work. They don't announce themselves. They don't send you an invitation. They don't wait for everyone to be positioned. They happen fast. They happen when sentiment is still uncertain. They happen when people are still debating whether the bull market is over. And by the time the mainstream realizes what's happening, by the time CNBC is talking about it, and your uncle is asking you about Bitcoin again, the easy money has already been made. The move is already halfway done. The people who positioned early, who saw the pattern, who understood the setup, they're already up 30, 40, 50%, while everyone else is just starting to FOMO in. That's how Bitcoin works. That's how every major rally has worked in this asset's history. It rewards the people who do the work, who study the charts, who understand the patterns, who have the conviction to position when things are uncertain, and it punishes the people who wait for confirmation, who need to see everyone else buying before they feel comfortable, who need perfect conditions before they take action. Right now, we're at that critical moment. We're at the point where the pattern has set up perfectly, where the consolidation has completed, where the breakout has happened, where the indicators are confirming, but where sentiment is still uncertain enough that most people haven't positioned yet. This is the opportunity. This is the moment that separates those who make significant returns from those who miss the move entirely. Bitcoin is finally back. The evidence is clear. The pattern is intact. The structure is bullish. The indicators are confirming. The leverage has been flushed. The weak hands are gone. And the next major leg higher is likely closer than most people think.